Exciting times in Saudi, isn't it?
Indeed.
Saudi banks recorded very good results this year, 2025.
They've had an amazing year. Yes, absolutely.
Very good. And from your view, Hussam, what are the top 3 strategic priorities occupying Saudi bank leadership teams right now?
It's been a very, very exciting years for most of the CEOs and the boards. Very rewarding for all the hard work that the banks have been doing in the last couple of years. Now the rewards are paying off. Still, 3 major priorities are still occupying the CEOs and the CIOs of these banks. I mean, the fact that they've invested significantly in building digital channels, how can they continue to grow these digital channels? How they can continue to make sure that it is relevant to their customer base? And more importantly, as they do that, how they can reduce and control cost. So these are kind of like conflicting components. And the third implication or the third priority is that they continue to think about is risk. How can they manage risk, especially in areas of cybersecurity, resilience, how they can continue to be, very strong uptimes. And more importantly, how can they continue to meet SAMA regulations, evolving regulations? Because as technology evolves, as new services come up to market, they need to continue to be relevant and abiding by the SAMA regulations.
What is the single biggest change in the Saudi banking landscape over the last 12-18 months that is reshaping technology priorities?
I think that's a great question. The last 18 months, there has been a significant shift in the mindset of how banks operate. The competitive landscape is shifting, which imply basically that they have to respond to that very quickly. So time to market is a big element, agility, and how they can actually deliver different services into the market, taking into consideration all the complexity within the bank itself, steer within the compliance and risk, but more importantly as well, how they can find means to launch these services effectively in the most seamless way, but at the same time, beating the competition and actually getting and meeting the customer expectation.
Saudi banks are being pushed to release faster. What are the top causes of slow time to market you see consistently?
There are 3 areas that basically impacting their ability to release and deliver services to the market. There's a decision latency, slow prioritization, unclear ownership within the bank itself, or overlay between different organizations, whether it's retail, corporate, treasury, heavy committees. Sometimes they have to basically build a service or release it. A lot of stakeholders within the bank that actually has to approve and drive the ownership of releasing. So decision latency is actually, they cannot make decisions very quickly when it comes to how they want to go to the market, the service definition, all the way to acceptance and testing. Dependency latency. So there's an element where there is tightly coupled systems and shared services causing blockers. So the fact that there's a lot of inter-technology dependency within the bank itself, it's impacting their ability to release these new services to the market fairly quickly. And then last but not least is delivery latency. So environment bottlenecks, manual testing, and late security gates. So basically they check security or compliance, check these code or these services at the end of the development cycle when actually they're testing, not as they develop. So that is impacting as well their ability to release to the market in time.
When a bank says we need modernization, what should they modernize first to unlock speed? Channels, integration layer, data layer, core services, or governance tooling?
If you look at the structure or the architecture of most banks, you're talking about primarily three sections or 3 layers. You have the channel and the orchestration layer. You have the integration and the API, the middleware, and then you have obviously the backend systems. The fastest way to actually move into modernization is you actually work to modernize your channel and orchestration layer, because that will unlock the fastest way to actually go to market, as you deliver these services. You want to stabilize the integration and the API contracts to reduce downstream breakage. And then obviously if you have developed your integration and API properly, and then you can modernize the core adjacent services before the core replacement, unless you're forced to actually do that. So these are kind of like generic advice, but it's actually very practical and it really applies, especially, and we've seen it, we're seeing this being effective and delivered in the Saudi markets.
Which capabilities should Saudi banks keep in-house to protect competitive advantage?
At the end of the day, you as a bank need to ensure that you own the product management lifecycle. So this is a very critical aspect. You basically develop and own whatever financial product you're going to launch to the market. Product management and domain ownership has to be within the bank itself. Then you actually need to think about the architecture standards and the platform direction and decisions when it comes to how do you actually structure and architect your systems. This is something that you need to continue to own. You cannot outsource. Last but not least, security, because it's not even an option. It's actually a mandate by the regulator. But there are ways where you can actually, some people outsource some element of security, but security ownership end-to-end, data governance has to remain internal and has to have accountability from within the bank itself.
Where does AI help banks today across the technology lifecycle? Let's say planning, engineering, testing, release to operations.
I think that's a great question because it's one way banks and others are actually exploring how can they basically use AI to improve their own internal system, their own processes. How can they actually change the way they do business internally? But AI for banks, it would boost productivity across the whole software development lifecycle when applied to assist tasks within controls. Okay. So what I mean by that is you basically look at where you can deploy AI, especially in terms of requirement summaries, code assistance, test generation, and defect triage. You release risk analysis and operational support. This is something that you can apply AI. Incident summarization. This is beautiful because you can actually record the historical aspect of things and then be able to manage release faster. And last but not least, value appears when integrated into workflow, not as a standalone tool. So you need to think of a workflow that you can apply AI within the software development lifecycle and actually apply that. That's where you can get the highest return on investment.
What guardrails are required so AI improves productivity without introducing new risk?
The myth is AI would come and replace humans, right? This is a very dangerous one. Yes, AI would actually improve the productivity and efficiency of processes, but by applying guardrails, you basically ensure that you're deploying AI where it makes sense from an impact perspective, while balancing it with a human intervention when it comes to secret checks, data leakage prevention. You look at critical changes, you look at adaptability of AI-assisted outputs. So there's things that you have to do while you're actually architecting or designing how AI will actually be introduced within your development lifecycle.
How can AI improve SME corporate lending decisioning realistically? And what must be true first? Data, quality, governance, explainability?
It's one application of using AI within the business itself, within the actual business decision-making process. So we found that AI can actually help with credit scoring, with underwriting itself, if it's applied in the right context. So you have to start with data quality. It's very important that you have the right data and it has checked. You cannot apply AI on a data that is not properly checked and improved. And then you have to put in place certain governance as well to protect, against any anomaly. And then use explainable models and monitor for drift and bias. Because sometimes the problem is we actually take certain algorithms that we actually apply from a human context, and we try to basically ask the AI to replicate that. The beauty about AI is actually it can come back to you with an improved algorithms that can actually help you with the decision-making process. And then integrate that into the underwriting workflow with human in the loop and clear policy rules. Basically, what you end up is approving a much faster, more accurate applications, while human can actually do the final check and release.